Morning, everybody. It's Tuesday, May 7th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here quickly had July corn down $0.0125 at 467 3/4. July soybeans were down 7 at 1241 3/4, and July Chicago wheat was down 11.5 at 637 1/4. Yesterday, the USDA released an updated crop progress and conditions report. Corn came back 36% planted. That's versus 27% last week and slightly below 5-year average of 39%. Soybeans 25% planted. That's versus 18 last week and 21 for the 5-year average. Winter wheat, to some surprise, was up 1 percentage point in the good to excellent category to 50. So that increased from last week's 49% and against the 45% for the 5-year average. One thing to note there, this winter wheat good to excellent rating would be the highest rating for this time of the year since 2020. So I guess some of those systems that have run through kind of out west, are improving some areas of winter wheat. Stats Canada also out this morning. Just a couple of highlights. All wheat stocks were significantly lower than last year, 11.6 versus 13.9 last year. The other one to note, oat stocks were pretty much half of last year's quantity, and corn was down 9% from a year ago. Guys, lots to talk about here this morning. Obviously, markets were exciting yesterday. Pretty good pop in across the board. A number of different things I think certainly contributed to that strength. Dustin, maybe just a few thoughts to get us cooking this morning, and then we'll throw it around the room.
Yeah, thanks, Dan. Yeah, we're making new highs for the move here yesterday and last night. D's corn traded up to 491. So I know 490 was kind of a big order number. There's a lot of orders there yesterday. It's a hard time breaking through that level. We did it last night. A little bit more excitement in the air. We have, not perfect weather conditions. Argentina, we're still looking at potentially lower supply. And, overall, I think the technicals have turned up a bit too. So some of these major moving averages have been breached. And we know that funds have covered shorts the last 2 weeks in a row. I think higher prices sometimes beget higher prices. As you start crossing through some of these major moving averages, you have a number of people that might have been taking on short positions or accumulators. And those natural sellers, may no longer be there to kind of hold the market from going too far. As we get closer to this $5 number, though, in new crop corn, I do think there's a lot of interest still. In fact, the March 25 contract traded up to 502 last night. So these are going to be some bigger psychological levels where I think growers are going to be taking a look at their ability to get $5 cash corn for January 25. I'm sure that's going to be a big push by some of the those major locations. Just because it's probably going to get some interest of new crop selling, would be my guess. It'd be curious how this week finishes out here. We've got some momentum, but we're also going to be right up against these levels. So
that's good stuff. And you do allude to kind of towards the end of the week. I mean, Friday we're going to have the USDA report. We'll get the first look at 24 balance sheets. Historically, USDA has thrown in, what they use for the Feb outlook. By those estimations, it'll be, record type numbers. So interesting, this pop we've seen. And then if you get sort of a, kind of a wake up call, maybe on Friday that we could still potentially grow a really big crop, right?
Yeah. We've already seen that with the Feb outlook for them. But a lot of times this May report is the first, the first use of the March 30th acreage numbers, and then their Feb outlook trendline yield. So the USDA can get creative on their demand estimates to change that a bit and, account for what is perceived to be a much higher supply will be led by higher usage. But a lot of times it's just a reminder to the market of the larger balance sheets that would come under trendline yields. The USDA Feb outlook, they did take an interesting approach this year, and they did not raise that trendline yield as much as many had anticipated. So they, with that 90 million corn acreage number, it's not like we have to be really creative on the demand side to get things interesting. A few lower bushels, if we don't have the perfect growing season, even with a 5% reduction in trendline yield, we don't necessarily have a perfect path to overly abundant supplies in corn. And the verdict will still be out when we get to that June 28th acreage number of where those acres actually went. And during that planting decision timeframe, cotton prices were extremely strong. I know that they've fallen off since, but the bean corn ratio has been very high as well. So this latest bean push has pushed us back up to 2.5 to 1, and we haven't had necessarily the perfect planting season. It's been delayed for a certain number of areas. But I don't see corn having gone in overly easy where we're just going to see that 90 million acreage number increase. And I think that was the initial response of the market is, oh, they'll grow from there. I don't really see why necessarily. I mean, we had huge corn acres last year. We have a really high cost production and low margins. That's typical that we would see a more even split of corn bean acres. I think my personal opinion is it still could go to beans.
Yeah, you think some of that cotton action, might be an indication that we picked up, more cotton than maybe we had earlier anticipated.
Perhaps, yeah. Perhaps there's some people that, chose to plant it and sold it, or enrolled more into the co-op, which sold it. Yeah, there's a couple of reasons that probably happened.
Sure. Ben, some thoughts from the East this morning?
Yeah, I just kind of tailing off on what Dustin was saying too, and he's brought up cotton. I think it's just a good reminder that there was a reason there for it to kind of get going a little bit. It had based for a number of months, and once it triggered, it really went with the momentum. And when it failed miserably. And I think it's a reminder that managed money can be wrong also. And they're getting in and getting out. We have seen it happen in the grains before, where they've gotten, they get whipped around a little bit. And I think that's a little bit of what you're seeing in beans for the moment, with knowing that the grower doesn't have the plentiful amount of supplies on old crops sitting in the bin that they do corn. So it's not an unequal playing field. They get their medicine at times too. As far as the East goes, it's kind of the same story. South of 70, south of I-26, pretty good progress across the board. I think in the next 7 or 8 days, a lot of people there will get wrapped up. There is some storms rolling through this afternoon and evening. Northwest Indiana and Northeast Indiana and Northwest Ohio. Pretty wet still, hardly anything at all planted. I know there's some guys that are concerned. The rest of Ohio tends to be moving along really well, and southern Indiana's moved along pretty well. So I would think that after these rains that we get a window here to get things and get caught up. At this point, I don't think this is a 2019 type of situation. Maybe we get proven wrong. But yeah, all in all here, pretty solid basis, just a little bit softer on the rally, which you expect. Go from there. I think it's a good opportunity to think ahead, especially in this region. I'm not going to speak for the West, but I do expect that once growers feel comfortable with their crop, there's a lot of bushels that have to be moved June, July, August in order to make way for the new crop. In a lot of cases, make room for some wheat if they're going to store it. So just things to keep in mind on a forward look.
Yeah, and you referenced 2019. To be fair, the crop was 23% planted at this time in 2019. So we are still significantly ahead of that pace. Not to say that things can't change, but just to put it in perspective for folks.
Sure.
Justin, a few thoughts this morning. I know we're seeing some levels where guys are, like I said, getting excited about, catching up or at least getting more protection on as we head into getting this crop planted.
Yeah, I mean, Dustin talked on a little bit, but, if you look at new crop corn, 491, the 200 days at 495, big psychological level of $5. And you start looking at what the deferred contracts are to what we just came from nearby a couple months ago. You're over $1 bushel higher if you start hedging off the May or July of 25. There's still some pretty good carries. So if you do look at accumulator type stuff, you might get some really interesting levels. We've got let's see here, July corn. July corn, for example, trading 514. So another 15-20 cent rally, you're actually into some pretty decent 525, 530 type levels if you've got storage. And even not, you might be close to $5 for fall or Jan delivery. So the market's giving you that chance. Can it go higher? Absolutely. You had enough factors that are forcing the massive fund short to liquidate. We've been getting farmers selling kind of the whole way up, but if you've been patient and we've only hit the 200-day moving average twice in 10 months on D's 24 corn. So to put that in perspective, we're a nickel off of it. So I think that's just worth keeping in mind. You could even if you had a further bull market, wouldn't surprise me once this kind of spring planting, whatever the fund short covering session is over with or calms down for a bit, you don't have a major setback and take even half back of what we just made. Even if it ends up being good, it's going to be a pretty painful, 30 or 40 cent pullback probably. If you're already nervous going into this rally about not having enough sold or your margins, I think it's just really, really prudent that you look at that and see where, what levels you can sell and protect.
Well, I think you brought up, you have a good point there, when you're looking at margins. And I've seen a proclivity in our industry in the past. And I hate to state the obvious here, because when I was in the Army once, a guy told me that when you state the obvious, it implies ignorance. And I don't ever want to be that guy, right? But what I see is we get too focused on a price number, coming out of those big years in 12, 13. If I could just have $7 corn again. And we get fixated on the price number and not the margin number. And sometimes that handcuffs people from making decisions. So I think that's really important. There was a reason that we were trading X price at that point in time. And there's a reason that we're trading this price at this point in time. So I wanted to mention that, you get fixated on a number and a price that happened in a place and time. It can detract and distract from what you're supposed to be doing. So,
I think that's a very fair point, Ben. Rylan, we got a couple minutes here before the open. There wasn't really much fresh that I saw in the livestock, but maybe just give me a quick rundown how we started the week and what you see going forward.
Yeah, pretty cautious trade in the cattle market. I think everybody's just got their eyes on the headlines right now, but at least there is a little bit of a better sentiment just from the beef. Choice was up 456 yesterday. Select was up 210. So, we've been just kind of waiting to see if there was going to be any kind of real seasonal strength or demand. So it seems like this is a little bit encouraging, but really we haven't seen the cash market start to pick up. It seems like we're still going to see kind of a little bit of a wider spread trade, with southern deals a little bit on the light side, on the lower side, and the northern side still carrying a little bit of a premium. So could just kind of make for a bit of a wild cash ride just over the next few weeks here, but it's kind of a wait and see. There really wasn't any new fresh headlines overnight, so I think that's at least something for the market to kind of glom onto a little bit, maybe given a little bit more optimism. And the market slipped below some of these major moving averages, and especially in the front end of the market, we're sub the 100 days. So I think those are levels just to keep an eye on if we do see some real support. But as far as it goes, it seems like the feeder market is still on edge as corn really starts to rally here. So if we're going to see a little bit of a down here in corn today, maybe we can find some support in the feeders.
Very good. Appreciate the comments there. We just came into the open here. We got July corn up a quarter, 469 and a quarter. July soybeans are down about a penny, 12.48 was the last. And July Chicago wheat's down 9, 639 and a half. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate everybody's thoughts and comments here this morning. It was a good discussion. Hope everybody has a good day, and we look forward to talking to you tomorrow. Thanks.
Thanks, Dan.